Uncertainty looming for some investors as we approach the new year, as we have a new administration coming in and future interest rate cuts in flux. How should investors be thinking about making major financial decisions going into 2025? For more, we're bringing in Michael Liersch, who is the head of advice and planning at Wells Fargo. Michael, always a pleasure to get some of your insights here. And so as you're thinking about setting financial goals in 2025, what is at the top of that list for investors?
Well, the top of the list, Brad, is really focusing on what you want to accomplish, but the big picture. And a lot of people are going, to your point, to tactics. What is the Fed going to do? How should I react to inflation in my spending patterns and in my financial life? I'd encourage everyone watching to take a bit of a step back, articulate your goals, whether that's a retirement goal or whether that's a goal to purchase a home, make a big purchase of another type, buy a car, whatever that is. Take a step back, really figure out the time period you want to buy that in, how you're going to buy it. Are you going to borrow money? Are you going to spend money from your own accounts? Are you going to divest investments to do so? And make that plan, because ultimately it's about time in the markets, time saving. It's not about market timing. And we need to remind ourselves of that, especially during, to your point, an extraordinary period of change.
When you talk about, and I love this point that you make as well in your notes as well, it's talking about intentionality specifically, because when you come to financial decisions, I mean, many of us kind of get into the analysis paralysis, right? So how do we then remove ourselves from that and kind of get out of that hole that we may have dug ourselves into by overthinking and then start to put tactics into action?
So there's a lot of fear that comes with change. And Brad, you know this, I'm a behavioral scientist, so this is the most fun and interesting thing that I love to talk about, which is how do you overcome that type of inertia? And you're making the exact right points. You have to be hyper intentional. So there's one version of fear, which is to stick your head in the sand and try to ignore everything that's out there. What I would encourage everyone to do is actually the exact opposite in 2025. Be extremely intentional. Watch your accounts. Watch how policies might change or shift or adapt, just like we saw with the Fed very recently in terms of some maybe of the changes they've made in terms of their perspectives. Be really on top of it, because ultimately what you want to do is position yourself to actually take action and reframe some of that fear into opportunity, because when you become opportunistic, then you can achieve your financial goals faster, quicker, with better quality. And that is really what intentionality means, Brad.
With the psychology around it, I mean, it's really feeling like some of the therapy that we all need with our own finances right now. So let's just go further in that direction. As people are really looking to not just make their list, but also begin to cross things off, whether it be purchasing a home, whether it just be building up the nest egg for retirement, or even making sure that they have some type of fund for emergencies. Where are you seeing, at least in where you're discussing with clients and how the firm is engaging with clients, where are you seeing that prioritization right now? What's most chief from what you're hearing?
So when we look at how people are thinking and feeling moving into 2025, we really see that they're focused on, and you mentioned it yourself, some of those essential ideas in terms of the goals that they want to accomplish, discretionary or optional ones. They're willing to, really more closely evaluate in 25 and perhaps even delay some of those ideas. So what I would encourage everyone to do is follow along, really focus, to your point, whether it's making sure that you have that emergency cash in the background, or even opportunistic cash to make an investment if it really presents itself as an opportunity to you. So that's where people are really prioritizing, is making sure that they are really focused on those essentials. And then when it comes to things like spending and how you allocate your resources, what we see is our clients want to focus on aligning that with their values. And that's what's really fascinating, Brad, about moving into 25, is this idea of value alignment, making sure I'm spending according to my intentions and how I view the value of my dollar. That's becoming really important. We see it in terms of people focusing on things like their community, really focusing on supporting local businesses. So it's an interesting trend to watch in 25.
Michael, thanks so much for taking the time. Happy holidays.
You too.